2024 has come to an end, and it was a year filled with valuable experiences in the world of dividend investing. From the highs that fueled my portfolio growth to the challenges that provided valuable lessons, I'm excited to share a comprehensive breakdown of my dividend journey throughout the year. We'll dive into the highs, the low, and what I'm planning for 2025 to build even more wealth through dividends. To kickstart this video, we first need to look back and see the goals I set for 2024 at the end of 2023. By the end of 2024, I was looking for the following goals: a dividend portfolio value between $22,000 to $25,000. This goal was accomplished, and I will be showing you the value soon. Number 2, $600 in projected annual dividend. I did not reach this goal, and the reason for that is because in July, I quit my 9-to-5 for a career break and enjoy life for a bit. By having no income, it means that in order to preserve my savings, I had to stop contributing to the portfolio, therefore slowing down drastically the projected annual dividend. Number 3, increase stake in high quality companies. As part of high grading my portfolio, I started increasing my stake in companies like Visa, but also added new companies that will take my portfolio to new heights like MasterCard and Google. Those 3 are high quality companies that I'm slowly but surely increasing my stake with dividend received, since I'm not contributing to the portfolio. And last, wellness, side hustle, and be more present. I got a mixed answer on this one. On the wellness and be more present side, since quitting my job, I was able to invest more in myself in several aspects. Hitting the gym, joined a running club, spent more time in nature, with myself, with friends, and with family. Now, on the side hustle part, I was trying to monetize this channel to have some income flowing in. Unfortunately, I'm long hours behind to monetize the channel, so that goal was not accomplished. 2024 was a good year overall, to be honest, and I am looking forward to what 2025 holds. Now, let's take a look at the stats. My dividend stock portfolio ending balance is $23,336.87, a decent increase from the starting value of $17,250.80, marking a 35% increase. I was investing $130 a week until July. After that, no contributions were made. The portfolio increased in a combination of ways: contributions, dividends received, dividends increases, and capital appreciation. If I didn't quit my job, the percentage will be higher, but I'll take the 35% increase. The performance of the portfolio against the broader market was something to be expected, as I am heavy on the defensive side. Taking a look on each time frame, one day we have minus 0.22% of the S&P versus 0.03% from the portfolio. This time frame is too short to determine the fate of the portfolio. 1 week performance, minus 2.36% from the S&P versus minus 1.17% from the portfolio. Over a week, my portfolio once again showed lower volatility. 1 month performance, minus 2.61 from the S&P versus minus 4.31 from my portfolio. This is when the S&P starts to pick it up against my portfolio, indicating underperformance in individual holdings or sector-specific headwinds, as dividend stocks in areas like consumer staples, which I'm heavy in, and real estate can lag in declining or sideways markets. 3-month performance, 2.42% of the S&P versus minus 1.68 from the portfolio. Still not a big difference in performance, but the S&P's positive performance over 3 months contrasts with my portfolio's slight decline. This may indicate that the broader market, driven by high growth sectors like tech, outpaced the steadier dividend stocks during this period. And the 1-year performance, 24.40% of the S&P versus 12.29% for my portfolio. This is a huge gap in performance. The S&P literally doubled my return, and this is the importance for aiming for growth, especially when you are young. When you invest in dividends, it prioritizes income stability over aggressive capital growth. Do I need more income now? The answer is no. So I should start aiming for more growth in this portfolio. Despite contributing half of 2024, the portfolio went through changes. I fully sold my position in Stag Industrial and initiated a position in Google and MasterCard. While continuously adding to my core holdings, which is Visa, MasterCard, and Google, the weighting in high yielding plus lower growing stocks like Realty Income, Johnson & Johnson, AbbVie, Hershey, and Pepsi got reduced. Since I'm young, focusing on growth rather than income is a better alternative for the long term of the portfolio. So expect my core holdings to expand and take a higher percentage of the portfolio. In 2025, I plan to continue high grading and possibly consolidating the portfolio, so stay tuned for updates. But overall, it is a decent portfolio with a combination of growth and stability that will do just fine over the long term. The dividend income in 2024 saw a significant increase, from $396 in 2023 to $537.18 in 2024. That's a $140 increase, indicating a 35% increase year over year. This growth was likely fueled by several key factors. Number 1, dividends reinvested. When I receive dividends, I don't take the money out. I use the dividends to purchase more shares. By purchasing additional shares, you increase your share count, leading to larger dividends. Number 2, organic dividend growth. All companies in my portfolio increase their dividend annually. These raises compound the growth of my income. Number 3, portfolio adjustment. In 2024, I made the portfolio change where I removed a slow-growing company like Stag Industrial and added MasterCard and Google, which have strong fundamentals and high potential for future dividend growth. So overall, the compounding effect on dividend reinvestment plus dividend raises amplifies the overall income of this portfolio. Now, for 2025, I need to go back to the basics and keep it simple. I'm not contributing to the portfolio due to the lack of income, and the only money that is invested are the dividends. So the goals for this year are the following. I'll continue to reinvest those dividends into my highest quality companies, Google, Visa, and MasterCard. Those 3 need to be a solid foundation that will carry my portfolio to new heights. In order to achieve that faster, we need to move to the second goal, which is to get a job so I can start contributing again. The job market is tough right now. I have applied to several jobs and there is either no response or declined applications. Eventually, I'll land something. And last but not least, continue investing in my health by hitting the gym, running, and eating healthy. Attempting to monetize this side hustle and continue being more present with friends, families, and myself. Thank you for making it to the end of this video. Let's make 2025 a good year to remember. We have a lot of goals to complete and experiences to live. Happy 2025. Thanks for watching, and I'll see you in the next one.